How you Warriors? How's everyone doing today? New recovery highs in the yen. Was that a stop hunt? I'm going to talk to Ryan about it in a minute. How you doing, Andrew? Mike? James? Hi, Ryan? Bran? Marcus? Ingmar? RC? How are you? AJ? How are you? Glenn? Brand's Righteous. The Righteous Brothers. Okay, so yeah. Anyway, let's take a look at what's happening on the screen. Stop this share. There, another one. I'll go here. Well, good morning, Ryan. How are you?
Morning, mate. I'm good. How are you?
Okay, so I noticed last night, for me, I think it was Asian session last night. We made a new high in here. Obviously, so far, it looks like it may have been a stop hunt. We didn't come close to confirming this high. Where's your head at? We going to come off a little bit here?
Yeah, I mean, we were talking yesterday. We've been knocking on that 158 door. It's another failure. I don't know if it came around. We had a Japanese auction, 5-year auction, which saw the highest yield since 2009.
Okay.
And we've seen a jump up in yields across the board. So that might have triggered that. The red candle next to it, though, was Finance Minister Kato coming out and giving it the verbal intervention, so that's knocked it down. But yeah, it's at the moment it's another failure, but I can't see it straying too far to the downside for the moment, unless we get a headline. Not with US yields looking very very buoyant at the moment. We've got a bit of a look. Tens are looking like they might be breaking out above that sort of 464 area.
Yeah.
If you look at 20s and 30s, they're breaking the the highs of the last few days.
Yeah.
So
There's TLT. Look at this divergence though here on the interest rate futures.
yeah,
So, our last confirmed this 4-hour chart, confirmed low was D24. So for a few weeks, TLT's been diverging. You can see the uptrend in the RSI. That's, pretty positive. I'd say don't be short. Okay. If you don't want to try and bottom pick it, and the turn date's probably, if we get a turn, maybe it's going to be the NFP. Do you think that's a possibility? What are you looking for in NFP? And we're closed the day before, I believe, for day of mourning for President Carter.
yeah, it's sort of a half close, isn't it? Stocks are closed and bonds are on half day, so yeah, it could be a bit of a funky day.
Yeah.
Um, as for the NFP, it's going to be, and as we said yesterday, again, this week is all about getting your chips on the table, and the NFP is going to be the first number coming into the new year that will get the market moving on rate expectations. So I don't think the market's set that the Fed is potentially on a pause, and now we're going to be playing how long that pause might last. If we get a strong NFP, strong wages, good unemployment, then potentially that pause is going to be prolonged. And in that case, I think we're going to see these yields remain supportive. I don't know if we're going to see them shooting up like we did from sort of the four, looking at tens, the 430s. It shot all the way back above to above 450. I don't think we see another leg like that, but I just think it might be a bit of a grind higher, just on the back of those Fed expectations. Seeing how long the Fed's going to pause for, because you've got to remember they want to get rates down still. They don't want rates up where they are, and
Okay.
they're fighting the battle.
Yeah. I mean, it's the first time I've seen an easing cycle with this kind of move in the opposite direction in my
Yeah,
career.
crazy, isn't
Uh,
it?
yeah, it really is. And Tony's asking the best way to trade stagflation or position yourself for stagflation. Do you have ideas on how you're going to, hedge yourself, take advantage of a stagflationary environment?
Yeah, it's a difficult one to trade. You have to, because stagflation is obviously two things: high inflation, low activity. At some point, the balance tips. Okay, so either the high inflation really tips the economy over, and then you're going to see, your risk assets getting sold off, or high rates combat the inflation side of things, and the economy doesn't sink too much. If you're talking US, um, there's still a strong economy over there. It's still ticking along. There's no real problems. So it's the inflation battle they've got to fight. But you look at Germany, just seen inflation go to 2.8% from I think 2.2% or something, and their economy is crap. So what does the ECB do? Does it keep rates high on the inflation, or does it need to cut them for the economy? And so if you're trading stagflation, you've got two clear cases and examples to watch: what's happening in the US,
Yeah.
which is less stagflation, and what's happening in Europe. And you can lay the blueprint across from one to the other to see how it trades. But yeah, trading, you've got to look at the economic side. If the economy crumbles, it's not going to matter what inflation's doing, and inflation should naturally come down in that situation.
Okay. Dollar looks like it wants to rally, and euro, EG is lower. Greg yesterday talked about that we could take out this low, and you know what? I can see how that can happen. See the RSI here, everyone. What we bottomed on the 4 hour, it diverged, but well under 30. So it's a possibility that it could wash one more time.
Absolutely.
Under 102. So that's something to keep an eye on. Tony, my bet, I think the sleeper, I think 2025 is the year of the miners. Okay. Now, even physical gold and silver people hate the miners. They say you'd be better off going to, because it was disappointing with what gold did this year and what the miners did this year. So even the bulls in the precious metal arena hate the miners. Okay, you're not going to find a more hated group. So, what do you look for now? Last year when gold was strong, the miners were lagging. All right, gold would be up $40, and you'd get a $1 pop in GDX, and then it would mineral. Yeah. So anyway, yeah, gold and silver shares. GDX. I just want to show a big picture on GDX, and I know I'm early. I started buying last week, but this is a pretty bullish long-term formation in GDX. Look at this. All right, so this was a COVID low, and this was a big rally, and this was a triangle breakout. Okay, and we haven't quite we tested it the week before. We could still test it. We could go 31, maybe 30, but we're about 61.8 back on this move. Okay, so I think it's going to be miners. All right, so that's my view for this year. I think it's the most hated asset class on the board. So that's it. And the dollar, we could get we could get another run in the dollar to challenge the highs, but I think we're going to be embarking on a bear market in the dollar. I was looking for this 109, 110, and if this turns out to be a failing rally of a descending triangle, there's big objectives, and I'm even conservative would be 95. So, look for topping action here in the dollar. Doesn't mean that this week was it. Some people even think 111. I think that over 111 becomes problematic. Okay. All right. So those are a couple of ways I think you could play stagflation, especially if bonds won't perform well. Maybe stocks do. You have to be in the right stocks, right? So anyway,
Just going back
but
to what Tony said, because I missed his point. He said, "What are the chances of stagflation? Do you think
oh,
there's a big
chances.
chance?" I think it's pretty low sitting here right now.
Okay. Just continued inflation.
Yeah,
Okay, but the economy is going to remain strong.
yeah. Obviously, you could see a
Okay.
bit of fluctuation, maybe a bit of weakening, but yeah, I can't see the US ending up, in European type situation as far as growth goes.
Okay. All right. And Looney, do you think that what we're doing up here, there's your monthly on the Looney. We're on the verge, we're starting a possible reversal month, but um, you think that just the resignation fundamentally of Trudeau, remember last week it was struggling, dollar was making a new high and Canada couldn't until the dollar started coming off. That looks pretty negative to me. And what do you think about the loonie here?
Yeah, I think we're only half trading this Trudeau stuff at the moment. We knew he was having problems. He's been having problems since last summer,
Yeah,
um, and it's all happening. If I think it really starts election trading, if the election gets brought forward. At the moment, it's still pretty much slated for October, and that's well out the
yeah.
market timeline. Um, Parliament's going to go into suspension until March. So maybe if we get election April, May, something like that, if they put it forward, then it will start taking notice. But for now, yeah, I think we just got a bit of exhaustion off the top, but it's not straying too far from those highs.
Okay, in Aussie, I was looking for one more low, that old one more jiggle, and the market looks like it's taken off without me in Aussie. What do you think?
Yeah, I don't think it's going just yet. If you come out to a weekly, maybe
Okay.
you'll see the importance of that low that we made just
Yeah,
over the turn of the year.
right. Yeah. It tested these lows
Yeah,
here.
right back there. Yeah, and a bit
Yeah,
further. So that was a potentially important hold. But again, if you draw a line off that, September October low,
yeah.
2024 across. No, next one, 2024.
Let
Sorry,
me get it.
2023.
Okay,
So
this low?
no,
Yeah.
right. Where your two
This
blue
one?
lines, yeah. So just across there, if you can find the lows, it cuts across right where that where the current candle is.
Oh, okay. On this low.
Yeah,
All
there's
right.
there's a yeah there's a bit of a zone. So just today's candle, that weekly candle, the high is just around
The
the underside
resistance.
of those resistance, and we can't get through that, and we need to get through that if we want to push higher. Otherwise, it's keeping the bearish move going, which is the picture for a lot of them. Kiwi, cable, euro dollar. That they can't get back over these little steps to turn around the
Right.
trend. And while that happens, then it keeps the bearishness going.
Okay. Silver, you know, a lot of people think we're going to trade lower, including, some people here at look at what it held, and it's not a bad day if it holds here. You see how we have two drives here in silver? We have one, we have two. It's an incomplete pattern to me. I
Yeah,
think we can make new highs in silver for a three up here. We'll have to get through 32, but it certainly held where it had to. And there were a lot of people after this break here that got bearish long term for, 26, the breakout. Um, this would be a fooler. And what's backing it up is things like the other white stuff. So I was taught by an precious metal guy that's been around for a long time. In fact, he has a name that is what people talk about in the physical um, metal market, David Morgan. So I always kidded him and said, "Did they name the Morgan silver dollars after you?" And anyway, he said the white stuff leads. So the white stuff is silver, platinum just coming out of this base. Stelios bought like platinum last week. He spent it all in Dubai, but he liked it. And and here's palladium trying to come out of the hole too. So um, you know, I think that the precious metal story continues even if we have breaks and corrections along the way. I think we're still in a bull market in metals. I don't think we've shifted to a bear.
Do you know what was interesting? We had a headline today that China are back in buying for the second month running, and gold barely blinked
Yeah,
today.
you know what? When they're saying that, I really think that they have gold to sell. All right. And when they say they're not buying anymore, they want to get lower prices to buy it.
Yeah,
I don't know who is foolish enough to just go with what the Chinese are saying because they're the best traders in the world. And anything if you're a great trader, you don't telegraph it. In fact, Ryan, here's a story. This is what guys used to do on the floor. All right, so the big traders, um, and everyone followed them in the pit. They would put on a position upstairs so
yeah,
that no one knew what they were doing. And then when they walked into the pit, say for example, they were long, all right, and all they would have to do to unload their longs was come in and put in a bid, and the rest of the pit came in, and that was their out.
yeah.
So, great traders do not telegraph their positions, and the Chinese are great traders. Okay, so fade that stuff. Um, Energy has kind of come to life. Ryan, you have a view on it? We know natural gas has had a hell of a run, and I hear there's some drawdowns happening in Europe because we talked about this, that you may not be as lucky this year with the weather as last year. Um, are you guys noticing it there in the UK? Are prices heading up again?
Yeah, they'll be heading up. I've never seen them go down as far as my bills are concerned.
Right, right.
But yeah, there's another cold spell sweeping across Europe. It's hitting us
Yeah.
tomorrow, so that's going to get prices back up again. And
You
they're
you
still
play
doing this.
ho you play hockey outside in the winter?
No chance. No
I
chance,
used
mate.
to. I did. I did. I used to walk to the outside park
Yeah.
in like 0 degrees. But we're invincible when we're younger. Um, anyway, WTI, you know, I don't know what's driving it. I think it topped yesterday. There might be a short, and I still think that we're going to see lower oil prices before we see higher. So when I look at a weekly, yeah, I know it's been basing, but all this time to just grind out this rally, unless we get back over 80, I still think there's a chance for 6.2. Um, and I think that would be bearish the market. So, um, what do you think? Are you still waiting for the 6,100 breakout in the S&Ps?
Yeah, I'm still sitting up there,
Yeah,
just in case we get up there. But it is looking constructive. The dips are becoming a bit more shallow, but it's not striking out just yet.
yeah,
Um, so yeah, we could still be building, yeah, a bit of a wedge pattern going on
yeah,
up towards that 60-30-ish area.
yeah,
So we'll see how that develops. That's just a sign of a market, not really sure what it wants to do. And as we said yesterday, Trump's going to be a big driver of this. So I don't know if stock traders want to push the envelope too much before they know what's coming from him. So every chance we see this wedge playing out for a couple of weeks.
Ryan, I was doing an interview and the host was talking about that there was going to be a strike in Vail, planning a ski trip. And something that the market has stopped talking about remember before the election, there was a threatened port strike that was really going to affect the supply chain here in the
Yeah,
U.S. on the West Coast. Well,
yeah,
they never settled that. And that I think it comes back up mid-month. I'm not saying that people are going to sell stocks because of it, but that could be a problem. The 31st, they have to raise the debt limit, right?
yeah,
Okay, so there are a couple of things out there, boogeymen, to, be. I mean, I know we've never we've never defaulted on, by not raising the debt ceiling, but
yeah.
who knows?
But you
You
have
know,
shut down. You have shut down for the funding thing, though.
for the funding, yeah, but
Yeah,
if they don't raise the debt ceiling, that's like a default. Not
yeah.
like a default, it's a default. So we've never crossed that Rubicon. Anyway, we'll see what happens with that towards the end of the month too. Um, so stocks are neutral to bullish to bearish. I don't know. This is the formation. Anything in between is just I guess, a bias and a guess, right?
Yeah, it's trade the edges and ignore it in the middle.
Okay, and I think we've covered a lot of stuff today. Anything that you're focused on that uh, you know face viewers should be paying attention to?
Yeah, I've got a couple of bits on dollar China, which I did well on yesterday for a first trade of the new year. That short up there, I got short above 135s, and we just held it this morning or
Okay.
yesterday again on a retest. But unless it's breaking down through 731, 730, it's going to keep the pressure going. Again, if you stick it on a weekly, you'll see how important that high is, or those highs are. It's like a big long triple top we got up there. So I'm looking
Okay.
at that one with a view of flipping to a long if we do go and break it, because I think we'll be off and running. But they're doing an awful lot to keep the currency contained at the moment. So that's going for me.
Well,
Um,
I think I heard chatter or read something, Ryan. Maybe you could confirm it about the PBOC wanting to coordinate more with other global central banks.
I don't know
Have
if
you
I.
seen that story? I mean, with the Fed
No.
and everything that they're going to try, some of the things that they've tried, they want to, um, learn how to financialize their debt like we have, or I don't know. They just talked about cooperation, which
Yeah,
is,
they're already sort of moving that way. They're messing around in their bond markets now, issuing more debt, stepping in, and buying and selling when as and when they see fit, just to keep things under control. Um, so yeah, I don't know if they're going to get more cooperation considering what's
yeah,
going on and likely to be it by tariffs. So of course we haven't even talked about that the Trump trade that we got
yeah.
another realization of yesterday.
What?
With that Washington Post story, the one that said he's going to go a bit easier on tariffs,
Yeah,
that only going to be on critical imports, and then 2:15 yesterday afternoon, he dropped it on this Truth Social platform that basically the story was a load of old crap, and that's why we got a nice sort of 130, 150 round pip trip in dollar yen. So
okay.
yeah, Trump,
All right.
Trump trading, and I was explaining to someone on Twitter who was saying, "How can it's unfair to traders? How can we cope with this?" And the harsh reality is, this is going to be markets trading via Trump. If you get a
Yeah,
story that moves the market, if it's gone your way, take some profit. Don't hang about. Don't look that gift horse in the mouth. Take the profit and then lock up your stops. Because if you do get a denial, then you don't give it all
yeah.
back. At least you've taken money out off the table. And
Wisdom.
conversely, if you're on the wrong side and you get knocked out, you get stopped out. Unfortunately, that's tough luck. That's trading for you. But look for the denial story or whatever, and if you're quick to the trigger, you might get on the move.
Yeah, anyway, that's a lot of wisdom because anytime the news goes my way, um, I become skeptical about my position and have to book something.
Yeah,
You know, I guess it's that old expression. people who buy headlines today sell newspapers tomorrow. Now, a
Yeah.
lot of news traders don't like that expression, but that's how I was trained.
Well,
So,
it's like if you're in a position, you're not in a position, usually for 5 minutes. You're in a position maybe for hours or even a few days.
yeah,
So if you suddenly get a headline or a news item that pushes the price your way significantly, you
yeah,
can't turn that down. You've got to take money off the table, because like yesterday, it could just reverse an hour later, and then you think, why didn't I take profit? It's too late. Then you need to take it
okay.
when it happens and protect the rest.
Uh,
Otherwise,
does any does anyone know what's going on with Meta? Because pre-market, it's getting hammered. I never believed that Zuckerberg is going to be part of the club. Uh, you know, uh, Call me jaded, but I don't think Elon Musk cares about what happens to Apple or Meta or Google or any of those companies. Only what would benefit Tesla. Zuckerberg, came and donated $1 million for the inauguration, and I think they were at odds during the first term. So I think that's a target. So pay attention to Meta. It made a new high. It's coming off pretty substantially. Apple, really big break. I don't think it's going to make new highs. I would sell rips there. Google could probably have another new high in it. Netflix looks heavy. I'd sell rips there. So even within the Mag 7, that's my point by showing these. These are all Mag 7s, right? NVIDIA looks good. Um, anyway, uh, that there's bifurcation even within a group of 7 stocks that pretty much traded together. I
yeah,
mean, this does not look like, you know, this, you know, and
yeah,
Microsoft, has a pretty heavy weighting in all the averages. I don't think Microsoft's going to make a new high. And you know what? Even if the S&Ps make a new high, this is what I wouldn't mind seeing is if the S&Ps make a new high, and I'm not, you know, they may not. I've already started buying April puts, but if the S&Ps make new highs and the Dow, I don't think will. Okay, the Dow's not going to new highs. All right, this was the first wave down, and the Dow could rally back to here. So I would love to see new highs in S&Ps and Nasdaq and a failing rally in Dow. That would be a pretty important market tell. I'd short the Dow and the other ones,
yeah.
or add. What do you think about that analysis? The
No,
people, huh? Huh?
absolutely spot on. Absolutely spot on, mate. Everything has been moving in the same direction, and when you
Yeah,
get those divergences, you got to pay attention to them because, like you say, it could signal a failing move.
a
Yeah,
change.
yeah,
Some kind of change. So, I remember when this was happening. You didn't hear boo from anyone. You know what you heard? Oh, it's only 30 stocks. It's only the Dow. The S&Ps aren't doing this. Nasdaq's not doing this. So it's only 30 stocks. It doesn't matter. Well, yeah, that was to rationalize the sell-off, I think. So something to pay attention to if we do get another melt up. See what the Dow does. I don't think the Russell has a new high in it. I mean, all the guys last year said the Russell was going to double. Sure looks like a flag to me. Would you buy this,
not
Ryan?
me.
This
No,
formation?
not
Yeah,
me.
it looks like a short, doesn't it? Look at the RSI down here.
Yeah,
So, you know, all that hype by Tom Lee and stuff that said that last year it was going to double. Okay, I don't think that happened. We didn't double. So that's something else to keep an eye on is this Russell because maybe we're going to 200. Um, let's see. Oh, you know what? I have a guest today.
You do.
Yeah, and usually I can, I'm on the sidelines because, Blake is usually talking to you guys, and I can get ready for an interview. But Steve Miller is here, and stick around for Steve. He's excellent. Um,
Have you
real
got the
good
power of
psycho.
promotion?
I'm promoting him,
Cool.
and so I was able to do so. Waiting for him to come over. Please accept your promotion, Steve. I'll demote you. Oh, okay. There
There
he
is.
is. So hey, Ryan, thanks so much for carrying the. I know you do your show, and then you help me carry Face today. Much appreciated, and I have a lot of respect for you.
Thanks, mate. Always a pleasure, never a chore.
All right, buddy. So I'll see you tomorrow.
Yeah,
And
definitely, mate.
okay, and Steve, welcome back.
Hey, good to be here. Good to
It's
be
great.
here.
It's great to have you. I'm going to stop sharing. I'm a fan, Steve.
Well,
You
I
know,
know
so
that. I appreciate that.
so you know what? But I have to say that I've been, kind of letting go a little bit and stuff, and I haven't seen any of your videos for a while. So I was really looking forward um, to oh, legendary expertise. Okay, and there you are doing your commodity perspective. So
Yeah, you see the top right
beautiful.
picture? That's 1974 on the original CBOE floor. Back of
Yeah,
that's my hands up right over there. So,
I tell you what, we were so lucky to live
yeah,
that. Yeah.
man, you believe we've been around here 50 years? It's just crazy.
When the calendar turned, in one respect, it felt like Groundhog Day,
Yeah. Yeah.
right? We've been staring at these candles for a long time, Steve.
Yep,
We
that's
should
true.
we should know how to jump over a lit candle without getting our tushy burned by now.
Yeah. Well,
What do
it's
you think?
I don't know. I think my butt is numb right now getting burned, you know.
Yeah.
Right.
So a lot of things have happened since you and I talked, the red wave and
Yeah.
new,
Yep. A lot has
market.
changed.
We had a little bear raid in December.
Hmm.
Um,
Tax
and
selling.
tech, no, before that though.
Hmm. Oh yeah,
When
right.
we were down that 180 handle day.
Right. Which
Um,
what markets are you interested in seeing today?
I know that you've been looking for a high in the dollar for a while. I'm wondering if you think we're there.
Well, let's take a look at that. We'll switch over. I happen to have the dollar up right there because I kind of thought you would might go to that one first.
Okay.
So, first of all, I must say that last time we met, we were talking about the dollar potentially making a move down to about 100 and getting below it, was sometime back in September. And, I had a feeling it might get down over there, but then I thought it would get into a rising phase. Now, I got to tell you that I didn't think it was going to get over 103 or 104 at that point. But then,
Yeah.
of course, when, we get into the period where Donald Trump gets elected, then it's, the whole story changed in a lot of markets because
Right.
when you're looking at the potential for his policies and the potential that that would push up interest rates in a significant way while you have the rest of the world really struggling. I mean, China nearly in a recession, or if it's not in one already, Europe
Yeah.
really slow. You've got a serious disparity in interest rates going on, and that drives
There
a lot of
and the
money into the
sentiment,
dollar.
there's absolutely no reason fundamentally to want to buy Europe over the US, right? I mean, the news is there's no
No,
reason,
no.
and that's a reason I'm looking for a low because there's no reason.
Well, I know, but I can't on anything I look at time a low any sooner than maybe in the
March.
mid-year some point. I mean,
Okay.
you see this note right over here, Euro trough, March to April.
Yeah.
That's about the time that I expect the dollar to be peaking. So if you look at, I'm going to blow this up so you get an idea. People that are watching this may not be used to seeing cycle analysis, but there is a very, very good rhythm in the dollar market in here, as you can see. And the bottom are the
Yeah.
cycle brackets, and that shows you the rhythm of money flowing in or money flowing out.
Yeah.
And as you made the bottom in here and it began to move up and it moved through all the resistances, well, that took you up to these real important extension levels and into this
Yeah.
resistance level. But now, you know, if there's a pullback, that pullback probably only comes here into around February and then up again into this March, April period. So this support in here is around 107 and a quarter. I
Yeah.
don't see
That's
it getting
important.
much below about 107 right now, pulling back and then moving
Okay.
up again. So if I look at the euro, I'll just look at the inverse of this, of course, EUR US dollar. You can see in here, once you got the breakdown under this level, the timing for the troughs in the euro are over here, which is in March, and this is in April down over here. And there's a potential getting under one in the euro right over here. So we'll just look at this in here as it broke down. You have all of this time to decline here in the euro, which means you have all of that time to rally in the dollar. So right now, you know, we're looking for a potential just pullback in the dollar and then moving up again. Well,
Until
here's a
March.
potential rally in the dollar and then moving in the euro and then moving down again. So, you know, I don't particularly like the idea that I have to be bullish in the dollar at these levels, but you know, I'm a technical analyst and this is money flows. And what we see is essentially money moving into the dollar. And when I look at interest rates, I mean, this is really the key. I'm going to look at the 10-year rates right
We're going
here.
to 5, above 5.
I mean, this pattern in here suggests that there's going to be a pullback in rates, but then move up again. Look at how well this aligns with what we just looked
Yeah.
at in the dollar, right?
Right.
Which makes
Yeah.
a ton of sense. So some
It does.
pullback in here, maybe down to 4.5, 4.4 something,
Yeah.
in the and then moving up again. Now you see this note right over here, the 10-year trough, which is inverse, comes out to
Yeah.
March or April. That's exactly what we just looked at in the euro currency moving down. So
Right.
there's all of these beautiful correlations and alignments, and they say to me that interest rates are still going to stay strong out into that March, April period.
Is it
There were
near the equinox, Steve? You know, because I pay
and I don't
attention to
really
those.
follow, I don't pay any attention to that
All right.
really, but
All
this
right.
is the
Well,
10-year, which is really an important key to what you're looking at. You can see this cycle analysis right in here. It's called for this rally, which failed in resistance very
yeah.
early in this pattern. And now
Yeah.
you have all this time to decline out here into late February. The daily
Wow.
patterns are synced also. So, you know, I'm looking for higher rates, lower treasuries out into that March, April period, and at the same time, a stronger dollar, even
Dollar.
though there's likely to be a pullback in there.
Okay. Now I'm curious with what your forecast is on yields because, you know, I look at TLT, Steve, and um, I think we're to take out that 80 low and actually could have a, you know, my next support level 72 after it takes out if it takes out 80 in TLT.
So here's that same ridiculously negative pattern
Yeah.
that we just saw in the ZNs. You
Yeah.
can see in here that it came down to this major 78.6% support. But
Yeah.
really, when you look at this and all the time that's left, I would project this down to that 82 level right
Okay.
over here as a
Yeah.
potential right in here. But this is
Yeah.
a
Could
very
take it out.
negative pattern when you look at this. Interest rates have a very high, remember, everything is probabilistic, and they have a very high probability of continuing to stay strong and move higher into this end of Q1 period for this year.
Okay. How about
After
the
that, it
indexes?
gets better.
Yeah. Okay.
You know,
So I'm wondering. It's almost like the new administration is going to come into sovereign debt crisis because you know we could get some type of you know you know we've come down, and everyone thinks well it can't get much worse, and then you have a huge down day after it's already been eroding. to surprise. I've been in trades like that the wrong way, where it's grinding down, and you think it's going to turn. It's so oversold. You might even have divergences, and then you have one down day. It continues to the downside.
Yeah.
Do you think?
If I step out of the technician's mind for a moment, when you look at Trump policies, I really believe that, first of all, Trump tariffs are coming, no matter what that Washington Post news was. You
Right, he
know, the,
denied that.
yeah, they're coming, and I believe that tariffs initially are inflationary. But then, based on the extent of the response, they could be very deflationary. And that would be well in alignment with what I believe is going to be lower rates starting in Q2. So the
Okay,
peak in rates in Q1, lower rates in Q2, and the peak of the dollar at the same time,
okay,
when that begins to reverse. So I know you're bullish in gold, and I'm very bullish in gold long term, but I don't think the gold market's going anywhere. The metals
until
markets are going
March.
anywhere until after Q2 or into
Okay,
Q2.
I
You asked
appreciate
about
that.
you asked about the stock market, which we have our own proprietary momentum indicator, and you can see this on the weekly SPX where this has turned down right in here. So that's giving me a sense that we're in a peaking pattern in here.
Yeah,
I heard your earlier discussion based on the Mag 7, and of course we're got up near about 38% on concentration, where the 10 top stocks are about
yeah,
38% of the S&P 500. That, by the way, is historic.
okay,
You're looking at book values, historic PEs, any way you want to measure it. The valuations are historic. So if the market's going to hold up, it's only going to hold up based on a rotation. That would mean that you have to get low caps, mid caps value all moving to the upside while these Mag 7s, while the money comes out of them. If not, the market's not going to, stock market will not have an easy time. My projection for the year on my big picture analysis was maybe sometime later in the year getting to 61.75. But to me, that's probably the highest we'll see it this year. Is my guess. Right now, we're in this kind of choppy corrective period, which comes out into February. So that says to me that the likelihood of attempted
sell off.
rallies to the upside will not, they will not allow the market to go up very far. So,
Okay,
I would say, hold on one second here. My wife set off the alarm in the house, didn't turn it off. I just got it.
all
Um,
right,
so I think I got it before the police come here. So when I look at the daily chart over here, you can see in here our projections really are for this. We're in this sideways chop on the daily chart, but then
yeah,
sometime over here, pulling back and coming down into late in the year. And I need to have you hold one more second. I'm sorry to do
sure,
that to
that's
you. If you
okay,
could just
Steve.
talk for a moment.
Life happens.
Okay, I think I've got it. Sorry about that.
Okay, that's fine.
When I look at the Nasdaq is exactly the same patterns that we're looking at in here,
Yeah,
where it actually did break a key level and then tried to come up. So it's really hard for me to see the Nasdaq getting any kind of enough upside flows into there to get much to new highs. Again, this is looking for a corrective period here out into February. And the Russell actually is a little bit better. It hasn't quite had the breakdowns that on the daily chart. Here's your weekly chart again coming out into that February or March period.
yeah,
But on the daily chart over here, this is actually it held up above that low and moving up, so it's a little bit better, but not much.
yeah.
So
Looks
there's
like a
nothing.
bear flag.
Yeah, if anything, it does look like a bear flag. So to me, all we're in is this choppy area. All the momentum conditions in here are not good. On the bottom, you can see it's our proprietary slim ribbon PO, which is red and getting ready to roll over. When you get a down arrow, that'll be negative. See, momentum here on the weekly is negative. So while the short term may be a little bit better on the Russell, it's really not in the best of shape in here. So the indexes don't look particularly good when you look at that. There's, I think, one really important chart that I'll put up that I think, let me just get this dialed up in here. And that is the VIX on a monthly chart. This is a chart that our members get to see, but I'm just going to blow this up so that you can get it. Look at the incredible cyclical action that you see here in applied volatilities. I'm going back here to 1987. And each of those periods where there is an important um, uh, outflows or a period where the VIX essentially remains low, that's where the stock market does really well. And then when it turns up is where you get into the periods where the stock market goes into sizable downside moves and big moves in implied volatility. And you can see you have the long-term capital management, the bear market here, the bear market here. And we are just coming into the rising period of implied volatilities on a monthly basis. This sets up, in my opinion, what I call is the great reset, the reset that comes after massive upside moves in the stock market. You know, we had one that lasted from 1929 to 1942. You had one from, 1972 to 1982. You know, these are 10, 12, 14-year corrective periods. And you've got the same thing where you just had this massive rally in the stock market. And we're going to get into a long period where it's very hard to make significant gains in the stock market. Money, there's a lot of money out there. And unless we get into a serious deflation, which I don't know that we will, because, the government wants to keep the money
all we
flowing.
know is that we don't know what's going to be happening with the new
So
administration.
I don't know where the money's going to flow, though. I'm very suspicious at some point it's going to be flowing back into the commodity markets.
Yeah,
and that's where the real bull is going to be. I'm going to switch over to gold before we run out of time.
You're looking for 2,400?
Look at the diamond in here. And I'm concerned about that at the same time that there's a corrective period going on and a breakdown in the silver market. I know you were looking at silver, but that has a breakdown in there. And if you look at this cycle right over here, this is the silver cycle, the dashed one. This is the gold cycle. This is the corrective period right here. I'm afraid that it's going to break this diamond and then come down, and we get some throwaway into this area somewhere around, 25.50 down to about just around 24.95.
I'll buy more
If that were to happen, then the next rising phase comes after that. But if you look over here, this corrective, the big corrective period, and look at the significant cycles in here, how important that dominant rhythm is that's in there, that doesn't end until mid-year. So we really could be looking at a second half story in the metals before they really get a significant upside move. When I look at the daily chart here, and you can see the gorgeous cyclical patterns.
What if we break out of that diamond to the upside?
Well, I mean, that would be a better situation, of course, if that were to happen. And it doesn't take a lot to do that.
And then we get a correction.
Then it pulls back not as far. It moves up again. It still moves into June before you get the ultimate corrective period. That doesn't really change anything. And if you look at this daily chart, I mean, these corrective periods come exactly on time. We're in one right now that ends in mid-January. So what happens then is you get into this upside movement right in here, which is likely to give you some kind of a failure here in the 2,700 area, and then moving down again. But when I switch this over to silver, this is really a pretty bad warning when I look at this in the silver market.
Yeah.
And that is this all while we're in the diamond formation in gold and didn't have any kind of a breakdown, silver did. So this points silver down to 28, down to about 26, out
That's a
into this
breakout.
period in March.
Yeah.
You know, it
Okay.
already, in my opinion, had the breakdown. Momentum turned negative over here in November and has continued on the downside. Momentum in here on the daily chart turned negative twice right over here, and here we're in a negative shape. And look at this scary head and shoulders that's formed here and actually is completed. I mean, that points down to $24 when you look at that. So
Yeah.
silver looks so bad to me that it really has me concerned about the whole
Doesn't the gold,
complex.
how about the gold silver ratio? Doesn't give you a different message?
Well, the gold, it gives me a message that the gold silver ratio will continue to widen out
To go up again.
to go
Head up.
up until
Right.
this period in May, June, when these bottoms are due. And then after that, you could get into, we know that silver has got the stronger beta.
Right.
And we can potentially see a very significant change where the gold silver ratio drops significantly in the second half of the year. That's
Okay.
really the way it lines up to me.
So you're probably there in the miners too. How low can they go? Because you did
Well,
pretty well with SLV last year.
oh, I had
And
some really big
yeah,
trades in there, and I actually got out at the right near the highs. I mean, I sold the SIL SILJ at
oh,
around
juniors.
13 S at around $13.
Yeah,
This is the SILJ right over here. So
yeah, it
it's
looks pretty ugly.
I did phenomenally well in there, but look at these horrible patterns that are in here. So this pattern right over here bottoms. I didn't pull this down, but bottoms sometime in February, right there. This one over here bottoms also late February or March. So if I were to buy these, and I'm planning on buying them again, it would be for a trade probably under, under $10 in the SILJ, but only for a trade because we're looking at that period of it correcting out into June. This points to a correction out into August. So I'm not thrilled with buying these except for a trade. And then again, they could have a much better time of it sometime in the second half of the year.
Okay, so the same with the miners that they.
Yeah, GDX is making a low right over here, but then this one points way out into August also. But here you got a trade that's setting up here in the GDX. So, you can see the low that actually came here in GDX already. The gold has got a little bit more time it could pull. So if you wanted to enter for a trade, I'm all right with that if you're a short-term trader because you could have this kind of a move here before it turns down. But it's only for a trade, 34.50 to 37. That's really all I see. Potentially 38 over here. But once I have the anchor points, I'll be putting in the resistances. But I don't really have an anchor point yet. So
All right, so it sounds like there's a lot of chop the first quarter.
yeah, I think so.
What?
And it may be that way the first half of the year. And I think for all of the markets, that really may be the case. And I think I think people are going to be disappointed by the fact that interest rates are probably going to stay high for a while and the dollar is going to stay strong and other currencies are going to stay weak. I mean, when you look at the British pound, that looks terrible. Um, one market we didn't cover is oil, by the way. And I had talked about oil moving down into this exact time frame and then making the major bottom. Here's this where all of the cycles make its low right over here, and we were looking for a low around the end of the year and turning up. Oil is one of the markets that I really like.
Okay.
I mean, I think
That's a
it's
sleeper.
already made that very important bottom. My projection for the year is reasonably up to $84 sometime this year. It could stop in here on these resistances at 77 or so, pull back, and then make another move up in the second or third quarter. But oil did exactly. I mean, look at these harmonics in here. They are crazy gorgeous. And
Yeah.
this is just the perfect time for this to be turning to the upside, as you see this completed harmonic family in here and the upward turn. Those other lines in here are that you see are the cycles in gasoline and heating oil, which turn up exactly the same time. So the products are just very, very much in
How,
line with it.
how about nat gas in line with the
Natural
WTI and lead?
gas, natural gas, I think is just in a super great pattern.
Yeah.
Um, whoops, that's NQ.
Yeah, I like nat gas.
And again, if you look at I'm on the weekly chart, look at these cyclical rhythms in here. I
Yeah.
mean, they are just gorgeous. Now, you see this corrective period that we're in?
Yeah.
This lasts out into sometime in February, let's say. And the daily chart actually has its bottom synced in February. So this corrective period and then moving
Gotta
up
buy it.
again, easily getting up into this, mid fours, maybe even into the fives, depending on where these extensions go when I have the anchor points.
Yeah.
So, fool around here for a month or so, month and a half, and then moving up again. And these are just absolutely exquisite when you look at that. So,
Steve
really,
Miller, you did
really
it
liking
again.
that.
Like every time, never fail to open my eyes to some things that I wasn't thinking about till you and I had a conversation. And I know people that watch you are, you know, love your stuff, and they should consider getting involved with you. How do they
Yeah.
go about it, Steve?
Well, the first thing, go to AskSlim.com. We have a ton of stuff in here, and you see this top right over here, free daily S&P analysis. They
Yeah,
get our S&P analysis every single day for free. This is the kind of the real entryway into how to really get a sense for what we're doing, and learning the cycle analysis that we do is a long, long process. I have a workshop in here called a cycle analysis workshop that, once they want to really invest in learning this type of analysis, this is 26 video modules. Took me 2 years to write, about 7, 8 months to produce. And so it's a real good way for them to learn what we do. Go to AskSlim.com. You have any questions, write team@AskSlim.com, and they'll be able to
yeah.
help you.
So Steve brings a wealth of experience, has a team, and his cycle work is excellent.
Yeah, thanks a
So,
lot.
you're going to need it this year. Okay,
Yeah,
this
yeah,
like I said, Steve, the days of owning the SPY and going out to the golf course for 3 years is over.
done.
Done.
100%. Right,
All right,
done.
buddy.
Yeah,
All right, so you need to learn how to be tactical now, not just I can ignore it because everything's you know coming up roses.
that's true. If anything,
Steve,
the downsides are going to be scary, so they got to learn.
yeah, and congratulations on having Gabe Kaplan in this picture doing his charts.
I've had a lot of people tell me that. I had a lot of people tell me that.
Well, you
So,
teach, you
yeah.
teach trading. You're like this.
I'm a poker player, and back some years ago, he's a poker player
Yeah,
also, and we were
yeah.
both sitting at the same table.
People say you're brothers. Did you look at each other?
I've had people tell me that. Yeah.
Yeah. All
All
right,
right.
buddy. I
Okay.
hope you and all your people have a great year and that pips and profits just overtake you like a flood.
Beautiful. Thanks. Happy New Year to you.
Happy New Year, Steve.
Take care.
Steve Miller, everybody. Follow him. And that's a wrap. Remember, don't just count your pips, count your blessings. You could join the team in 15 minutes on the morning edge. Isn't Steve great? Some real excellent looks. Thanks for sharing, Steve. Adios.